Good afternoon, everyone. I am Alexander Gillis, and this is the Stock Watch for Oceana Gold for the Philippine Mining Club. I recommend that you visit their website where they have a tab called Investor Center with plenty of information about the company operations and the financial results, as well as the share of stock. The stock is traded in Toronto, Canada. The name of the exchange is Toronto Stock Exchange, nicknamed TSX. And the nickname for the stock, or the stock code, also known as ticker, is OGC. The stock traded recently at $2.78. Here's a sample price chart for the past 3 months, where the share price was $2.3 in November of 2023, and by the end of February, it was $2.78. Just by clicking on the boxes on the upper left, you can change the view to the 1-year chart, the 5-year chart, or the 20-year chart. So I recommend you do that and click on and see how the stock price progressed over time. Just as a review, the share price multiplied by the number of shares outstanding will give you the market capitalization or market value of the company shares. The number of shares outstanding seldom changes, but the share price tends to change every day. So it's worth it to monitor on the website or on a broker app how my investment is faring. The website gives you additional information about latest on company news and financial results, as well as basic info on company shares outstanding, for example, and other financial details like level of cash or debt. So that's important to be able to see the financial situation of the company and its prospects. Now, just as a review, how do shares of stock come about? And why do companies issue shares of stock? Number two, why do individuals buy shares of stock? To answer both the questions, let's look at how all companies in the world need capital in order to operate and to grow. One way to raise capital is to borrow money. You can borrow money from a bank or from individuals, whoever is able to lend at that point in time. Companies can also raise capital by selling shares in the business. And if you buy a share in the business, you would be entitled to a share in the profits. Now, money from a bank is normally called a loan, where you pay interest every so often, and then you eventually return the principal after a set number of years. Money borrowed from an individual could also be a loan, a straight loan, but you can also borrow it in the form of a bond. You say bond because I bind myself to promise to pay you 5% a year and to return the money at the end of this number of years. Now, a bond is a piece of paper that can be traded. So let's say that you lent money to a borrower, and then you're collecting interest from the borrower. You can sell that bond for the same money that you used to buy it with. For example, if it's $1,000 bond, you can sell it to someone for $1,000 as well, or at a different price. If it's a very in-demand bond, maybe a higher price. And then that other person who buys the bond from you will be the one to collect the interest from then on. Now, going to the shares of stock, if you buy a share, then you're entitled to a share in the profits and also a vote in the deliberations of the company as to what to do this year. And the name of that monetary share in the profits is cash dividends. An example of cash dividends is the company might announce that every shareholder will get this year $1 for every share that you own. It's also entirely possible that the share price of the will be rising. The price of the share rises, and as a consequence, the value of your investment also rises. So that's double good news. Cash dividends and a rising share price, that's also known as a capital gain or capital appreciation. If operations go well in general for all companies, then usually the shares and profits would also go well, and then the share price should correspondingly rise. So you can see this usually in the long term. because over a period of months, prices can go up and down depending on the willingness of the buyers and the sellers to transact. But so that even if the company operations are doing well, you can still see a share price zigzagging back and forth because of the interplay between buyers and sellers, which has nothing to do with the company operations, which could all be very safe and sound and reliable. But the interplay among buyers and sellers could be unpredictable. So you see some price movements which are erratic because of the interplay between the excited buyers or the sellers who are impatient. Now, the best way to go about this is to invest long term. So it's always possible that in a company that's well run with good operations, good sales, and profits, you will see the share price moving up over time, over months, and over years. It can sustain itself over years. And it's a good policy to invest for long term because all of the zigzags tend to even out over time. So I recommend that you visit the Investor Center of Oceana Gold to find out more about their company operations. You can download the presentations, which can present the financial information in a more colorful way with graphics, easier to understand than the column of accounting numbers. And um, I recommend you invest in shares of OGC for long term. Thank you for your kind attention. Happy investing. I am Alexander Gillis of the Carillonpartners.net. Thank you and good day.